I'm probably going to get absolutely skewered from this all over YouTube, TikTok, and Twitter, but the reality is, this could actually be an incredible time to buy real estate as an investment. Contrary to what you're reading on X or TikTok or everywhere else, this time right now could be a great time. And it's like a universal truth right now that we're hearing that, well, real estate doesn't cash flow anymore in Canada and there are no opportunities. It might be changing really quickly, and we're going to talk about exactly why today, using some data points as well as just general feedback on what we're seeing anecdotally in the marketplace. I'm Alex McFadden, and if you're liking the show, hit that subscribe button when you hit the end. So let's get into it, shall we? This is why buying real estate as an investment is going to be a key consideration in this market right now, despite high interest rates, despite what the government's trying to do. First and foremost, we have never ever seen rental rates as high as they are right now. In addition to that, there is likely zero chance of that changing in the near future. Let's look at some of the numbers here. As of right now, the recent CPI report has inflation at a 4-decade high, specifically as it pertains to rental rates. And we're seeing reports all across the country, and especially in most major cities, of there being such a minimal supply that people are bidding 20, 30, 40, 50 people are bidding the prices of rent up. In fact, I've experienced this in my own properties in the past. It's not a lot of fun for anybody if they're searching for a rental right now. Now, for those who say we're going to see supply issues fixed in the near future with some of the new federal announcements that have come out regarding apartment buildings, not exactly the case. As we know, there are over 500,000 people expected to enter the country next year and probably the year following, and there are just simply not enough houses or properties available for people to rent out. And that's not going to change in the near future. What's interesting to note is that we've seen more and more people actually dump off their investment properties in 2023 and 2024, which has obviously led to less properties available in the rental market. But a big reason for that has been the reason why people are buying real estate as an investment. You see, it's been a hot topic or hot commodity, and it has been a situation over the last couple of years where most people have been able to purchase properties and actually bank on appreciation as a primary reason for buying that investment property. That just simply can't be the case if you're looking to invest into any real estate. You must be looking at your yield, your return, your potential cash flow, and the long-term outcome. And unfortunately, those people who are getting hurt in most situations are the ones who actually didn't look at the numbers and didn't actually calculate their best case and worst case scenario. With those people dumping off their properties, we're seeing less of those properties actually hit the rental market and more of them become homeowners. So while that might calm down demand when it comes to real estate prices for a while, it won't do anything to help out the actual cost of rent going forward. There's an interesting stat that came out from Royal LePage Canada, and that stat said that up to 1 in 4 Canadians are actually considering still buying real estate as an investment property. And it still does make sense. You see, for a lot of people, there's the benefit of potential gains on the property valuation and the long-term growth that we've seen. And as I mentioned earlier in the conversation, the limited amount of vacancy continues to show that this could be a very strong strategy for Canadians for years to come, with a strong, proven track record of yields and overall growth. So let's talk a little bit about the next wave of investors. Now, most amateur investors, as we mentioned earlier, are buying real estate predominantly for the purpose of appreciation. And we know for a fact that appreciation simply cannot be counted on. It's really just a gamble. Whereas people who are professional or those who have actually done a little bit of research realize it's more about the yield and the long-term potential of this investment property. So what that means is that you'll probably see more people who have a little bit thicker skin in a position to buy real estate in 2024 or the end of 2023 for the purposes of investment, understanding that that long-term outlook is going to be favorable when it comes to cash on cash and the overall value of the property. So really, at the end of the day, it's a good thing to note that it is a buyer's market. And it's the first time that we've seen a buyer's market since 2019. And even then, we didn't see a buyer's market of this capacity. And there's a lot of reasons that that's likely to change going forward. I mean, let's talk about it. We've got 500,000 potential new Canadians coming to our country, and those people are going to add to the potential buyer and rental pool. In addition to that, it's expected that we'll start to see interest rates come down next year. If we see rates come down just 1 percentage point, we can see actual qualifications go up by as much as 8.5%, therefore increasing the cost or the value of real estate. We're not building enough supply. We've talked about this lots of times on this channel, and that's not going to change in the next 12 months. All of these things together are going to end up meaning more competition for rentals, but also more competitions for buyers in the next 12 to 24 months. Notwithstanding the potential of renewal renewals. We're going to see real estate move hands, but we're also going to see a lot of people still get into the marketplace, eventually driving prices up. So here's the thing, right out of the box, a lot of properties, even right now that you purchase as an investor, may not cash flow. So there is an element of future planning and future dating, looking at where interest rates could go and where rental rates could go. But even if we see interest rates go down at half of what the expectation is, which is expected to be at least 2.25% over the next 24 months. And even if we see the increase in rental rates cut in half with a slow increase, we will eventually see those paths cross intersect, and it will probably happen at a much sooner time than you expect, which means that even if you're not cash flowing today, it can happen much sooner than you expect, which is going to turn out to be a fantastic investment for those who are willing to risk the current state and time to get into the marketplace. And let's be honest, any well-established and solid investor knows this. There is no such thing as a perfect investment, and there's always an element of risk in any real estate environment, this one notwithstanding. I do believe, however, based on all the statistics and all the facts, that 2024 will end up being an incredible year when we look back in 5 years for those who opted to purchase real estate specifically for the long term and specifically to look for long-term cash flowing assets. So here's the thing, not everywhere will there be great opportunities, and there is a potential of risk. Here's what you should be looking for if you're going to be looking to buy real estate as an investment in 2024. The first one is you need to be following where the migration is. Look for cities where we see a positive net migration or immigration. Look also for areas where they're having trouble building and their building is not on track with what we're looking for as far as expectations of consumers in hand. In addition to that, you need to be well capitalized because you need to keep in mind that it's possible the BOC could take longer to reduce interest rates than we might expect. And if you keep all these things in mind, again, you could likely find an actual gold mine out there in the real estate market.